Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita.
And I'm Yatin Mota.
Well, Yatin, RBI policy, RBI stuck to the script, no repo hike, no change in stance, but I think it's the incremental CRR of 10% that the banks are supposed to maintain that came out as a surprise. And we saw the market giving up all of its gains in the morning. And we ended below that 19,550 mark as well. Nifty Bank, one of the big laggards today. Aside of that, you have FMCG that was also under pressure. Pharma, autos, all of these were the sectoral losers. On the gaining front, you had metals as well as energy pack that managed to hold out. Even the mid and small cap indices gave up most of the gains and ended the day in the red. Among the Nifty gainers, you had Adani Ports, IndusInd Bank, JSW Steel, Titan and M&M, and on the flip side you had most of these FMCG names, Asian Paints, ITC and Kotak Bank, Britannia. These were some of the losers. But Yatin, the big story right now, the breaking news that came in is that Z has got the NCLT approval for the merger with Sony. Stock was up 15%.
Absolutely, and 15-16% move coming in for the shares of Z, and the much awaited NCLT approval has come in despite the objections from several creditors. There was some objection later on filed by the stock exchanges and SEBI with respect to the promoters, but I think all the objections were rejected by the Honorable NCLT in Mumbai, and they gave a go-ahead to the Z-Sony merger. Obviously, what happens here is that Sony gets merged into Z. The shares get suspended for a period after the process gets completed between the merger of Z and Sony, and according to the exchange documents and the public information, Sony would be infusing close to $1.5 billion in the merged entity. Now this means that if Sony is merging and getting $1.5 billion or 12,000 crores as cash in the merged entity, then there could be some game changing event, especially in the inorganic growth front, in terms of improving the online streaming apps, and a lot of things can be explored between Z as well as Sony, number one. Number two, that Sony will be a majority shareholder after the merger, holding a little over 50%, along with the promoters of Z. It could be close to 55%, and the balance 45% would be the shareholders of Z Limited. Now this merger is quite important given the fact that Z had its own headwinds in the recent past, along with the promoters, which have been facing some issues relating to personal debt as well as debt in their personal companies. On the other hand, Sony has a very strong balance sheet and globally recognized for their prowess in the entertainment industry, and with cash coming in and Sony subscribing shares over 300 rupees per share, that is a price which they announced during the merger, probably gives some breath to investors which have been facing a lot of uncertainty in the recent past. Now according to the document, Sony will also give promoters of Z a non-compete fee of 1100 crores and a board representation. Obviously, because of the SEBI orders, promoters and the board representation is still under question, but according to the representation made by the promoters in the NCLT, they said that it's a merger of two companies and individuals and their litigation should be kept away, and they'll comply with the law of the land. So it's something which is quite interesting. Obviously, the only caveat here is if any objecting parties appeals in NCLAT versus this order, that could be some short-term hassle. But given the fact that NCLT has cleared the merger, probably now Sony has an upper hand in the management as well as the operations moving forward.
Right, important update in fact coming in for Z, and that's an important development there given the fact that the stock saw a 15% rally after the order. But on that note, let's also take a look at my stock, the one stock that I have on my radar today is Trent. Now this stock hit a fresh 52-week high today. Yesterday also the stock was up somewhere around 5% or thereabouts. So in a matter of 2 sessions it has gained over 11% or so. If you look at the numbers, they were pretty strong. Revenue growth was very strong. In fact, profit growth was also pretty strong, somewhere around 45% growth on a YY basis on the back of a low base. Now increasing share of revenue from Zudio is something that impacted its gross margins. But aside of that, 12% growth in same store sales for fashion concepts like Zudio and Westside bodes well for the company. In fact, if you look at the brokerage views, Jefferies has a hold rating, target raised to 1640 rupees per share, and Jefferies says that it has 700 stores with hefty additions in Zudio. Morgan Stanley, on the other hand, has an equal weight rating on the stock, target price raised to 1624 rupees per share. It says that the growth momentum in the fashion segment is a positive for the company, and reduced subsidiary losses are something which is also boding well for the company. Now, when you look at Zudio, it caters to value fashion vis-a-vis a Westside, which caters to mid to high segment customers, right? So that's why if there is a like increase in revenue share from Zudio, that means the margins would get compressed a bit, but because of higher turnover, that's something which could offset the fall in gross margins going forward. That's what some brokerages believe. Even in last quarter, I think the revenue share from Zudio had increased, and brokerages had pointed out that it's a high turnover business because of it being a low cost fashion brand. That is something that will be offset by the higher inventory going forward. So that's one stock that's on my radar, given the fact that we are seeing higher inventory from Zudio. At some point it will offset the weakness in gross margins.
Clearly, and this is one of the stocks which moved yesterday as well as today on the back of good earnings show. What moved today apart from Trent was the share of Max Financial, MFSL. Now CLSA has a buy rating on this one. They've raised the target to 1025, and the key trigger point why the stock was up as much as 10% intraday was the fact that Axis Bank decided to infuse funds at a much better premium to what the last transaction was announced. And Max Financial subsidiary, Max Life Insurance, is where Axis Bank has been steadily increasing the stake. Now Axis Bank stake increases to 19% in Max Life. The VNB margins were slightly disappointing at 22.2% given the cyclicality of the business, but healthy traction is seen in retail protection, non-par savings and proprietary channels for Max Financial. So both on the earnings front as well as the announcement by Axis Bank to infuse money to a better rate at which it had decided earlier because of a lot of technicalities. Finally, Axis will have a decent stake in Max Life, and probably that is the reason why brokers are also ascribing a higher valuation to the share of Max Financial.
All right, Max Financial there rallying somewhere around 8 to 10% in today's session. Clearly one of the top Nifty 500 gainers. But let's also talk about Bharat Forge. The numbers came out yesterday during market hours, and the stock was up and about yesterday. Today it's a little under pressure, 1% or thereabouts. That's because mixed views coming in from brokerages. Numbers were pretty good. In fact, management was on CNBC yesterday, and he did say that the order book has been increasing steadily when it comes to the defense segment, and he also mentioned how the European subsidiary has turned EBITDA positive, and also gave a guidance as to when the US business could turn around. That's by Q4 of FY24. So strong commentary coming in from the management, and in fact, if you look at the brokerage view, Morgan Stanley has a overweight rating target price at 1028. It believes that the first quarter performance was impressive, and with higher share of defense and aerospace in top line, all the other segments are also doing pretty well. Morgan Stanley also believes that the strong core business and defense opportunity will drive growth for Bharat Forge. Jefferies, on the other hand, has an underperform rating with a target price of 750 rupees per share. Now, it likes the structural story of Bharat Forge, but it's concerned over the rich valuations. So, mixed views coming in from brokerages. And look at CLSA, that has downgraded the stock. In fact, even CLSA has said that it has concerns regarding valuations when it comes to Bharat Forge. Now, Bharat Forge, I think trailing PE for this stock is somewhere around 63x or thereabouts, vis-a-vis the sector PE, which is at 60x. So, and the stock has also run up nearly 30% or thereabouts in the last 1 year. Which is why brokerages are a little cautious when it comes to valuations. But aside of that, numbers have been pretty good. Defense, aerospace, all these segments are doing very well. And as the management mentioned that a large part of the order is from the defense segment. So things looking good for Bharat Forge, but valuations is one concern that Street has at the current juncture.
Absolutely, and this is one stock which has been always expensive. Plus the kind of opportunity that the company sees in defense business should drive the earnings from here on, especially in the second half, because they are executing a lot of export orders for artillery guns, and recently they have received a license for small arms. Nandita, with that, we have completed two stocks each,
Yeah.
and we are all awaiting for the PM speech to start in
That's
the Lok
at 4
Sabha.
p.m.
Yeah, that's at 4 p.m. So probably viewers need to stay tuned for all the action on the no confidence motion and the PM speech on that matter.
Yeah, so tune in live at 4 p.m. and catch the PM's speech in Lok Sabha and what he has to say about the no confidence motion. But with that, it's a wrap on this edition of Closing Bell. So from me and Yatin, thanks a lot for watching. But for all your other news and updates, stay tuned to Moneycontrol.